This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode.
Hello, this is Hall Martin with Investor Connect. Today we welcome back Greg Bohlen of Union Grove Venture Partners. Greg, thank you for joining us again.
Sure.
And the last time we talked, you talked about Grove's investment strategies and partnership criteria. I'd like to just maybe give us an update about yourself and what's going on with your group these days as well.
Sure. So, I'm happy to report that things are going well. Our net returns across all of our funds, including the funds we're actively investing, is over 28%. And funds that are older, not current funds, have a DPI higher than 3, and we're pretty excited that that's leading the industry.
Well, that sounds like a great return. It sounds like things are going well for you guys. Can you talk a little bit about the sectors you're in and why you chose those?
Sure. So we are in a wide and diverse group of sectors. Our primary drivers in making investment decisions are that an investment should add either transparency or efficiency to a process or a marketplace. And so we're in things like Progeny, which is a woman's fertility insurance company, Poshmark, which is a women's apparel trading platform, and we have exited out of Beyond Meat, which was a nice exit for us, and several others that are focused on that area of either providing efficiency or transparency. So,
well, that's great. And what sectors do you avoid these days and why?
Well, we're still avoiding energy. We made one investment there, classic mistake. We thought that we had a company that was going to lead the efficiency in solar and CPVC. Turns out that it did, but nobody cared. And we're avoiding pre-clinical risk in healthcare companies. We are staying away from directly investing in Bitcoin, although we've invested in some funds that have made Bitcoin investments. And we've been very focused on trying to avoid high capital intensity companies or companies that have taken huge rounds of capital and are now, the rat through the snake's belly. Unfortunately, they're starting to run out of money and are trying to restrike themselves. So we stayed away from those kinds of companies.
Great. Is there a particular company you regret not investing in, and why didn't you go after it?
Thousands of them. Well, hundreds of them anyway.
Any particular thesis that turned out to be different than what you thought it was going to be?
So, yeah, obviously we made an investment in a solar company. I thought that solar was going to proceed apace along the Moore's Law curve. Turned out that thesis was wrong. And although solar is now mostly cost effective without government subsidy, it still is a highly capital intensive process. So we made a mistake there. That was my mistake. I've made mistakes in telecom equipment, an area that I won't dabble in again. I think telecom companies are doing a lot of their own innovation work. Major suppliers, and it's pretty hard if you're a small supplier in that space to do well and make a lot of money long term and have staying power.
Well, great. Well, you mentioned Beyond Meat. It sounds like that's one of your best ones. And maybe you can tell us, of course, there's many reasons why people went into it, but what was the reason that really drove that one up? There was a lot of plays going on at that time, but that seems to be the big winner. Why is that?
Well, a couple of things. Anybody who thinks it's a fad doesn't understand the underlying economics of the marketplace. So on protein efficiency, if you're using feedstocks for livestock, you have an efficiency ratio that's somewhere between 7 and 14%. And 14% are the poultry, 7% are the split-hooves animals. And Beyond Meat was able to achieve higher than a 90, I can't give the exact number, but higher than a 90 plus efficiency of protein conversion. You can, in essence, feed the entire world on protein if the states produce this protein from Iowa, Illinois, Indiana, and Ohio. That would feed the entire world. So pretty shocking transformation of food stocks. And in addition, I think, whether you are a believer or not, the health benefits, a zero cholesterol alternative is pretty attractive. I think some people have argued about highly processed, and my response to that has always been, we're happy to put a camera up that's live on the internet 24/7 on our production floor. If beef processors, you will do the same thing. There haven't been any takers. I don't understand why somebody wouldn't want a camera on their kill floor, but there you have it.
Yeah, very, very good, very insightful. And that is a tremendous efficiency and value for protein coming out with it. Didn't realize there was so much gains by going that direction, but we can certainly see it that way. And also in climate change, it seems like the carbon footprint of livestock is so large that it's just not sustainable to grow up much bigger than it is. And it sounds like this is much more efficient on climate change characteristics as well.
Yeah, it is. I didn't invest in it for climate reasons. It's turned out to be a benefit. Another benefit has been that mutual funds needed CMG companies, and we were really the only one that was coming through the pipeline. So it made it much easier for folks to buy us.
Well, very good. Well, going forward, are there any particular sectors or applications you're looking at right now that look interesting for you? Which ones, if you had to pick one or two, would you call out?
Data and data applications are keenly of interest. Food is of interest as well. There are a lot of new food products that are beginning to come through the pipeline that I'm fascinated with, and a big believer in. Marketplaces, enterprise software, those are the areas that we really focus mostly on.
That's very good. Well, in the last few minutes that we have here, is there anything else top of mind that you'd like to share?
I don't think so, Martin. It's a good time to be alive. I hope the music doesn't stop for a long time and the record stays, or the needle stays on the record.
This is quite a long boom and expansion in the history of our country, and it just doesn't seem like it's ever going to stop, although my heart of hearts it will. What do you think might take it down?
Oh gosh, a black swan event, something that we don't even think about right now. Probably not coronavirus, but there's something lurking out there that will substantially change the fundamentals of our economy, and we'll have to process that and deal with it. But I don't know what that is today.
It's going to be something interesting, I'm sure. Well, appreciate your taking time to share this with us today. How best for listeners to get back in touch with you?
Sure. So my email address is very simple. It's the letter G at ugbvp.com, Uncle Golf Victor Papa.com.
Great. We'll put that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks. Have a great week.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.